On March 14, 2020, the S&P 500 reached a record-breaking all-time high, reaching 3,380 points that day. The events that unfolded over the next week would ultimately change the world forever, and this was reflected in the index as well. For the next month, the market dropped almost straight down, falling nearly 31% before beginning its epic recovery. At this point in time, the world was in a very strange place. Inflation was the last thing on everyone's mind, but soon, following a massive injection of printed cash and a miracle recovery by the S&P 500, many began to wonder, can the government really just press a button and make a devastating recession go away without any hangover or side effects? It was not long before experts began to make their predictions, specifically that inflation would start to eat up America's buying power. However, these people were the minority. When this all started back in mid-2020, many of the world's leading financial figures were convinced that inflation wasn't going to happen. It was only when we saw commodities, home prices, and even their own CPI numbers jump that the tune changed. Now, this was the narrative.
Question. So I actually have a couple of things I'd like to say about inflation, including addressing your question. So with a little bit of context, we're making our way through an unprecedented series of events, really, in which a synchronized global shutdown is now giving way to widespread reopening of economies many places around the world. During this time of reopening, we are likely to see some upward pressure on prices, and I'll discuss why. But those pressures are likely to be temporary as they are associated with the reopening process. And an episode of one-time price increases as the economy reopens is not the same thing as, and is not likely to lead to, persistently higher year-over-year inflation into the future, inflation at levels that are not consistent with our goal of 2% inflation over time.
Soon the Fed narrative centered around the word transitory. Sure, we have inflation, but it's only here for a little bit, and as soon as the economy opens up, everything will go back to normal. Well, as we've seen over the past few months, this has not been the case. Inflation continues to soar. Over the summer, we saw the Fed's very own measurements jump up to record high levels. You as a consumer have likely felt some form of bottlenecks in the supply. Try to get an appliance or a piece of furniture and you will see the effects for yourself. Summer 2021 came and went, but supply shortages remained in place. I made a video that showcased the centerpiece of this problem, focusing on the port of LA with hundreds of ships docked off the coast awaiting unloading. These bottlenecks have not been resolved, and now we're seeing a new push from the government. They have used up almost every narrative possible, so now they are just left with one. The new wave is this: inflation is actually a good thing. Today we're seeing various reports and prominent officials beginning to claim that inflation is going to help the everyday person by increasing wages and raising the equity in your home. Specifically, they want inflation to seem like a, quote, high-class problem. Take a listen to Jen Psaki explain exactly this.
Inflation is skyrocketing, as I don't need to tell you. The prices for home heating costs, cars, groceries, furniture, rent, gasoline are hitting Americans right in the wallet. The White House response has been generally to say, hey, inflation shows that we're coming out of the recession, so it's a good sign. President Biden's chief of staff, Ron Klain, enthusiastically retweeted an economist who had said in part most of the economic problems we're facing, inflation, supply chains, et cetera, are high-class problems. Now, I get the larger point that when we're talking about economics, we're coming out of a recession. But doesn't it seem tone-deaf to say that rising prices and empty grocery store shelves are high-class problems? Isn't that a bit dismissive?
Well, that's not exactly what the tweet said, nor the retweet of the original tweet, which is what we're talking about here. It is true, though, Jake, and economists will tell you this, and I know you've interviewed some of them as well, that the fact is the unemployment rate is about half what it was a year ago. So a year ago, people were in their homes, 10% of people were unemployed, gas prices were low because nobody was driving, people weren't buying goods because they didn't have jobs. Now more people have jobs, more people are buying goods. That's increasing the demand. That's a good thing. At the same time, we also know that the supply is low because we're coming out of the pandemic. And because a bunch of manufacturing sectors across the world have shut down, because ports haven't been functioning as they should be. These are all things we're working through. What people should know is that inflation is going to come down next year. Economists have said that. They're all projecting that. But we're working to attack these cost issues that are impacting the American people every single day. But there's different issues in different sectors, and many of the ones you mentioned.
Jen can push these points, but people are finally aware of what is going on. Memes like this are surfacing all over the internet, and inflation has went from an obscure talking point mostly mentioned in college classrooms to mainstream news. Where we go from here is the big question. Right now, as you watch this video, the most recent CPI number released by the government indicates a 5.4% increase in prices from last year. This may not sound like a lot, but it's one of the highest in recent history. In fact, many argue that this number is very misleading. You see, the federal government has changed the way it measures inflation many times over the past few decades. Let's just say that these changes have somehow always managed to result in lower inflation readings. The old methods, if applied today, would reveal shocking figures. This website called Shadow Stats publishes inflation data using many of the old ways. By looking at this chart, you can see that using the 1980 methodology, inflation would be at nearly 15%, almost 3 times higher than the official number today. This is why many, like Peter Schiff, are arguing that 2021 is actually starting off worse than the infamous inflationary period this country experienced in the 1970s. His outlook is quite shocking. And if you watched his most recent Fox News interview, he reveals a way everyday people can protect themselves against this powerful force that ruins your buying power. Take a listen.
Peter, I follow your work. You have been warning about the dangers of inflation for eons now. Wages are not rising as fast as inflation. So it's pretty simple math, Peter. If your wages are going up, say, 2%, and inflation is 3 to 5%, you're losing money. I mean, sooner or later, we're all going to be eating cat food if this continues.
Well, that's generally the trend with inflation, is the price of labor never keeps up with the price of stuff. But the real problem is that immediately after COVID, a lot of Americans stopped working. But unfortunately, they didn't reduce their spending because the government made the mistake of replacing the incomes they lost with new money that the Federal Reserve was printing. So we were making fewer things to buy, but everybody had more stuff, more money to buy stuff. And so prices just went ballistic, and they're going to keep going up. But one way that the average American can try to avoid it is to stock up now. I mean, buy the things that you think you may need a year from now, 2 years from now. Buy it now, especially the stuff that's non-perishable, because in the future, stuff is going to be even in shorter supply than it is now, but the prices are going to be much higher. So why wait for the prices to go up? Just buy the stuff you need now while it's available and a lot less expensive than it's going to be pretty soon.
As you just saw there, it's Peter's opinion that the price of everyday goods will continue to rise rapidly over the next year. His outlook is that we're just getting started. Unlike the 1970s, which saw Volcker and Reagan declare war on inflation, we are seeing politicians today do the opposite and embrace it. Talks of more money printing to fund various stimulus programs are real and ongoing. Our current Federal Reserve has no plans to raise the rate, which is now essentially at zero, and more people are quitting their jobs. America is unable to fill its labor shortage despite millions who remain unemployed. You know it's concerning when Schiff skips right over gold and goes straight to recommending non-perishable goods as a way to hedge against this tide. One can make the argument that folks like Schiff have been predicting severe inflation for the last 10 years, and when you claim doom for long enough, you will eventually be right. But either way you look at it, Peter's talk about inflation from 10 years ago is finally coming to fruition, and watching what happens from here will be interesting from all angles of finance. As always, thank you guys for watching. If you're enjoying my content, please make sure you help the channel out by hitting that like and subscribe button.